For people new to Gaming Innovation Group, can you give us the elevator pitch?
Yeah, I think what makes us unique is our ability and capability to help land-based casinos and brands to fast forward themselves into the digital environments. That's clients like Hard Rock in the US or Sky City in New Zealand. And we have all the capabilities, everything from the technology products to people and services like CRM, customer service, to really make them a world-class operator in a digital environment. That's what we do for brands around the world.
Any brand you can mention that people might recognize?
On that side of things, I think the strongest brand is Hard Rock Cafe, which is very proud that they selected us in the US as their provider. We work with them in New Jersey and now also Iowa. So I think those are the most famous name right now.
With your business model, you are selling both to B2C and B2B. How much revenue is from each segment at the moment?
Yeah, so from a revenue perspective, B2C is 2/3 of revenue, but however there we also have a lot of marketing and other sort of cost of goods sold. And the third is from the B2B side of things, which is in media, for example, is very profitable. So it's you need to look at it both from a revenue side, but also from the underlying profitability in this vertical. But that's how it looks today.
Regarding to the structural change in the gaming industry with increased regulation, in what segment have you been affected the most?
Yeah, so on the B2B side of things, this is a trigger for growth, because there we see that everything from white labels to land-based brands, they want to go somewhere and they want to have help in this environment. And there we can help on our B2B side of things. On the B2C side of things, it has been tougher because there's increased taxation, there's more restrictions on bonuses, and these are new initiatives by the regulator that the industry needs to adjust to. That has made it more difficult for some of the brands to make a profit. So we are reallocating some resources from on the B2C side of things to markets where we see better return on investment. So it's a mixed bag. On the B2C side, re-regulation is a positive trigger. On B2C, it can be a challenge sometimes, depending on how the regulation sort of plays out.
Your new CEO, Richard Brown, said that he will start with a strategic review of the company. Mm-hmm. Would you say that there is any low-hanging fruit, something that he or you will start with immediately?
Yes, he's been very good at sort of addressing these things, and he has a strength that he comes from the company, and he was a COO prior to being the CEO. So one of the first things we have done is to close the game studio. Even though it looked good on paper, we didn't see the KPIs and the milestones being hit that we expected, so we decided to close that. That created a saving for us as of December, but preferably or more in January going forward, of like 250,000 euro a month. Also, we are addressing marketing to make sure that the marketing money we spend has a return. And then in general, we're looking at technology. We have a lot of costs that we can sort of consolidate. We're running on 2 parallel platforms. We are renegotiating with suppliers. So there's a lot of things we can do short term, but also mid term and also long term. So we're very busy with that, and we're going through an investment phase and coming out of it. So it's a lot of things we can do actually, and cost is nice in a way that you can control it yourself.
Next year we are looking at Spain and Croatia markets, mm-hmm. which are regulated markets. What experience can you bring from the newly regulated Swedish market?
Yeah, the difference with Sweden is that the penetration of online gambling was very high already because of the fact that we had TV stations broadcasting from the UK, which was been legal for decades. So the penetration in Sweden was already very high. Most of the target group that was so the addressable market was already playing online, so the tax became actually sort of on top of the market, and then with the new sort of more restrictive bonuses, the self-exclusion, so the market actually went down. So that's a different story in Spain and Croatia, where the markets are very young and very early in the S-curve. We've seen sports betting brands in Spain for quite some time, but what our strength and our brand, like Risk, is more of a casino-centric brand, and that's less sort of taken market. So we see actually good opportunities in Spain for a strong casino brand, and that's really our strength. Croatia, again, is a regulated market. It's sort of a capped number of licensees we think going to work there. We have a good sort of joint venture approach to the partner and with ourselves there. So even though it's not massive in terms of population, we think it's going to be a very profitable and healthy market for us to operate in.
Final question then. Could you tell us a bit about the finance situation, especially in regard to the bond covenants?
Yeah, so we are having parts of the bond that still have to be refinanced, and we have the covenants. So that's of course something that also is very important for us. And as we have said in Q3, we are going through a strategic review right now to look at some of our assets we think are very valuable. If you combine all the assets we have, we think maybe it's not really reflected in the way the market looking at us. So both sort of ongoing OPEX, but also looking at the balance sheets on the asset side of things. We're working very actively to make sure that we're on top of things. So.
Thank you very much.
Thank you.